Good morning, everybody. Welcome to the Flow Show, Thursday, 26th of June, and rockets going on in the dollar and elsewhere this morning. A nice bright start when I sat down this morning, things taking off. Before we crack on, only a few days left to get on our mailing list to find out what's going on, what's coming up here at ForexAnalytix as we transition into trading analytics. This will be your last chance to get into the prize draw for a free $25,000 trader funding program assessment account. So chuck your name and your email in there if you haven't already. If you have, don't put it in again. Otherwise, it doesn't matter because it won't get counted a second time anyway. You'll only get one shot at it. That draw will happen early next week, so be quick or be dead, as we like to say. Morning, Kay. How you doing?
Morning, Ryan. Yep, doing very well, thank you. And yes, get in there, as I would say. Sign up, and you will join us very soon. Then.
Yeah, absolutely. Right, let's get into the headlines, and not too much out from Asia overnight, that can be said. We did have we've got all the politics going on there at the moment, and one of the bods over there, Kashiba, said that if they don't win the upper house election, there could be a government change coming up. So that's something just to keep an eye on. That election coming in 20th of July, apparently. So we'll see what that brings us. Otherwise, through Asia, it's been fairly quiet. So we're going to start with some of the data from yesterday before we get into anything else. If I've got the right page up, there we go. So housing numbers coming out. New home sales for May coming in worse than expected at 623,000. That's a 13.7% loss over that. The median sale price came in up 3% from this time last year, but down 7.5% over last month, 426,500 versus 411,400 last month. So we're going to keep an eye on this housing market for a little bit, I think, to see if this is the start of something. We already know that house prices have been trucking lower a little bit. And that's confirmed yet again by these numbers. Fed heads have been out again. Fed's Collins says monetary policy is well positioned. It's time for patience and care. Sees core inflation, core PCE inflation above 3% by the year end due to tariffs. Fed's Powell was on the waffle again, not much of note than what we got yesterday. He did say, though, that future trade deals may allow the Fed to consider a cut. What the Fed have done is they've released their plan that they're going to ease their key bank capital rule. This would reduce their aggregate tier 1 capital requirements for globally systemically important banks by 1.4% or 13 billion. In layman's terms, they're giving a bit of easing to banks, keeping money back for a rainy day. So they're letting out by 1.4%. Commerce Secretary Lutnick has said that if they cut rates, if the Fed was to cut rates, the deficit would shrink and the economy will soar. Hassett, joining the bandwagon as well, says there's plenty of room for the Fed to lower interest rates right now. And then midnight last night, we got a Wall Street Journal piece saying that Trump is considering naming his next Fed chair early because apparently he's going to do that. He wants to undermine Powell. According to sources, this is all sources, he was originally looking to replace him by September or name the replacement by September or October, but he now might accelerate naming a successor. Apparently, he's got people lined up. He's considering Walsh, Hassett, and Besant, Waller, and Malpass. Waller, no shock there, given his recent comments. Bit strange, okay, throwing Besant and some of the others in the mix, though.
Yeah.
He talked about Walsh before, though.
Yeah, but this Wall Street Journal article is writing about what Trump said himself during the NATO meetings when he spoke about absolutely everything and everybody in in that NATO meeting. I didn't really understand what it was doing there, but he did speak about Powell and the potential replacements. He himself had 3, 4 names in mind. Um, Obviously, he really wants to put max pressure on Powell to start cutting rates, and he doesn't miss one single occasion wherever it may be. Even if he meets with Iran next week, he might talk to the Iranians about replacing Powell, I think. But anyway, yeah, those names. I I don't. Well, it could be because it's Trump, right? But I wouldn't. I don't understand why he would ask Besant to take over because Besant is the treasurer, and that's a massive role. And I wouldn't understand why it would be Besant. I think Waller, with what he said, climbed the ladder up the ladder a bit over the past days. And the other
Climb
ones,
the trouser leg.
sorry.
Climb the trouser leg.
Yeah, oh yeah, that as well. Yeah, but then you could also include Rutte in in the next potential Fed governor. That wouldn't be a surprise after what he did. But yeah, Walsh was, as Mike Brown already said in our room as well. Walsh was actually a hawk, and I'm not sure that he is going to be top of the list. So then you talk about, I don't know, yeah, Hassett, but if and then Malpass, I don't know where that name comes from, but yeah, there's a few names. You know what? I think that if you put Waller in there with perhaps um, Hassett, and then maybe there's going to be a bit of a surprise coming that all of a sudden a different name is going to pop up. He may ask Besant, but really, in and that's just my opinion. Besant, when you're a treasurer, do you want to go back to the Fed? Is really a big question to me.
Yeah, very much so. Walsh has been an old Fed head, and then you can see what Michael's tipped up there. Good stuff as always. Yeah, it's who knows. I mean, yeah, it's quite clear that those like Hassett and Besant are just political picks, and I don't know how that will go down well with markets. I don't think it will, because even if they are Fed chair, it still has to be agreed what monetary policy is going to do. So, you know, if you've still got a load of hawks in there, Biden picks and whatever, it doesn't mean monetary policy is going to go the way they want it. But who knows? Yeah, I don't think the market will take kindly to Besant and Hassett. Given the dollar's taken a whack on this, I don't know. Has it taken a whack on the fact that Trump might make an early change and get his rate cuts, or is this the market saying no? This is more uncertainty we don't need.
About Powell, data will tell us. Really, data will tell us. But it does leave that little potential possibility open because he repeatedly now is saying that he can change his mind relatively quickly depending on how the data will come. Whereas before, the only line was we're in a good position. We wait. Now there is this small possibility, and then you start to have those yesterday's housing data again, a bit weaker.
Yeah, it was more the reaction we saw to this story is that dollar selling on the back of, oh yeah, rate cuts will be coming sooner, or is it the market saying no, this is more uncertainty, messing around with the Fed? That's not good news for the dollar.
A combination of both. I think a combination of both. It was already ongoing, and people who want to diversify, let's say, away from the US, just got another reason why they would do it. And and at the same time, there is stuff going on in the back about those tax cuts, about the increase in fiscal deficits, and et cetera, et cetera. It all comes one on top of each other. It's just not one thing that is driving this. This is, of course, another excuse, as we have been saying so many times. The market just needs one excuse and hammers the dollar again. But if you're already, as a money manager, in a diversification of your portfolio, this is for sure not going to tell the person or the asset manager, oh, we need to stop here and wait. If it would be only Powell and nothing else happening, we may be in this scenario where the market says, well, hang on a bit. We are they are not cutting. There is still a bit of a risk. The data are not dropping off a cliff, but all the rest around it is telling those people, yeah, well, let's just continue to diversify.
Yeah, and various US bods have been telling us that trade deals are likely to come very quickly over the next few days if the tax bill passes. One of those trade deals, which seemed over the line and in the changing room and in the bath and drinking champagne, was India. But there's just been a headline popping up saying that India and US trade talks are in deadlock ahead of the deadline. They're in disagreement over tax for auto components. So still, there is only one, well, it's probably only half signed deal with the UK. And even this India deal, which was supposed to be done weeks ago, is still facing problems. So all these trade deals not happening just yet. Just keep an eye on that. Next week, we've got a busy data week, obviously, NFP week, everything else. But we will be trading towards the deadline, and the market's probably going to be picking up on that at some point. But headlines like that aren't going to do the US any favors either. Right, where am I? Speaking of trade deals, Italy PM Maloney says a 10% tariff from the US would not be particularly impactful for our firms. Looking like more and more European members are coming round to accepting the idea that they will be getting some 10% tariffs in one way, shape or form as part of any deals done. Kay mentioned RUT. Well, all the NATO allies agreed on their defence spending target of 5%. Spain still being the fly in the ointment, though. That was one of Trump's proclamations. Big win. He got everyone to do the 5%. He's a happy bunny with that now. Save the world. He can get his Nobel Peace Prize again. So we're back on that. And our energy twat, energy czar, Mr. Ed Wibble Wobble, is going to cancel a 25 billion wind and solar energy project. I think he's fallen over, bumped his head and put some sense into himself. This was a project, hear this, this was a project where he was going to build a cable, undersea cable between us and Morocco so we could import energy from Morocco. I'm going to leave it there while I really start swearing. But anyway, apparently that's going to be tinned, thankfully. Anyway, moving on. Okay, that's about it. I've not really got a lot. You got anything else?
No, mate. I mean, it's all been about a couple of stories. What I would say as well, and when I said like all the rest is like quite dollar negative, I think it's also during the time that Trump was giving his speech at NATO, he kind of signed off on what NATO was doing, despite Spain playing a bit hardball, etc. But I think all of that is also a kind of uncertainty or stress point that may have been taken away, and therefore risk doing a little bit better. We know the relation that the dollar can have with risk, and I think it's just a little bit of another little add-on to why the dollar has been suffering again.
Yeah, absolutely, and obviously some month-end stuff coming in. I mean, that was a pretty hefty 8 a.m. this morning.
We are there.
Yeah,
we're finally there.
finally there. We can all talk about it.
Yeah, but today we don't really know. We're trading value date end of month. There could be some US corporate shopping to be done. Most of the models now are again calling for the move to continue in the same direction as we are now for the dollar. So the short end, I mean the monthly and quarter, maybe, but if I look at the half year, I see a bit of divergent signals. But okay, let those very clever models that we see from banks have their thing, and yeah, they are still calling for dollar selling.
Yeah, very much so. Right, data today. We've got some durable goods numbers coming out today. Fairly hefty rise expected, 8.6. This has been all over the shop recently due to airline stuff and all the trade stuff going through. We've had some big old swings going on here, so this data might be volatile again. So probably better to look in the underlying details to see what's going on, like consumer goods and whatnot. We also get the GDP numbers out as well, Q1 GDP numbers. They do contain PCE stuff, but this is just updated stuff. Okay, we get the PC numbers next week. Okay, for the new month. I think it's a new month. Yeah, for June. And Powell's already tipped the nod at that anyway. So this is the final numbers for GDP. So there shouldn't be too much about it anyway. The revisions have stayed pretty steady as well. So GDP won't matter too much on that basis. Apart from that, that's it on the data front. Some pending home sales a bit later on, and a couple of auctions to top us off. Kay, did you see anything with it? Was there a 5-year yesterday?
Yeah, weakish, but it didn't have any impact at all. Zero.
Yeah, cool. And apart from a few Fed heads getting their CVs dusted down for Mr. Trump, yeah, not much else to crack into today. So well, that's it. Let's get looking at prices then and what's going on. Where am I already? I'm already in dollar yen, so I might as well stay there. Well, I'm in a 5-minute chart. No idea. Let's go on there. So we had this move out the top of the wedge, whatever you want to call it. Now we've had a move down the bottom of the wedge. Obviously, volatile stuff. You know, you've got to not ignore this, but it doesn't make a blind bit of difference. When we came back in, we started respecting it again. We're tightening up here, though, so the volatility is going to make this technical pattern obsolete, if anything. But, you know, we're still in this uptrend, so just keep an eye on what this is doing in the longer term. Is something to keep an eye on, unless we start breaking down through 143s and start testing some of these lows down towards the 142s, then this trend is still sort of valid. But this move under 144 could be significant if we start holding it. Let me see if we are. I did see we had a little test up, a little ping above. Didn't last very long. We're back below. So keep it on this 144. If we start staying below there, then we're likely to push lower as well. Top side 144.30s, 50s, and then into 144.90 are going to be the levels again. If we get a move up there, we'll see whether this zone is now become resistance. Euro dollar had a bit of a whack up. It cleaned out 117 overnight. Had another go this morning on Mr. 8 AM man, failed that, and now it's gone through again. We have got some hefty options activity in this pair today. Over 4 billion going off 116.90, 117. So if this doesn't stray too far to the upside, close to expiry, we could see something happening around that. But end of month forces may overwhelm whatever's going in the options. But if we get, what are we, 10 o'clock, so another 3 and a bit hours, 4 and a bit hours, if you start seeing that coming back down to 117, you'll know that it's the possibility of some option effect there. There's nearly 6 billion down here at 116, which is probably well out the woods right now, but never say never in this game. 117.50 has been on everyone's list. Let me just ping it to my longer term. I know Kay's got a lot of stuff to look at here. But we are still getting up to some big old levels. The ease which we've gone through 117 is really quite significant. It just shows you the strength that we've got going on here. Be it end of month, be it dollar X tin, whatever it is, you just got to be very careful, particularly with trying to short this. Might be the case where we need to see a bit more of a solid top coming in. For me, you can probably pick a few levels around the figures. 119 is the next one. 120 is obviously going to be the big one. And I think if we're sailing over 120, then the ECB is going to start facing a bit of pressure. They've been happy to let the euro go. They will have limits, and I think we were over 120, getting up to 125s. They might start feeling a little hot under the collar, shall we say? But you know, they're giving it the green light. They've got to wear it now. Kay, your thoughts on the euro? I know you lightened up a bit. Are you long?
Yeah, I lightened it up because I do have decent levels around here, both in euro dollar and the cable. So yeah, my base longs I've let fair pieces go now. Uh, Traded the ads around. Those ones had left a little before, but now I'm starting to lighten up the pace as well. It's yes, 120. Everybody's now talking about 120, but one step at a time. If it goes down though from here for I don't know, validate reasons, options reasons. I may start to load up again into month end. I agree on the well. I mean, I still agree on my bias hasn't changed, and the level is just a level, right? It is just a line on a chart. Yeah, I think we can go higher. I think ECB may start to change tone just a little bit, but then and that's where the interesting question comes. And Nachiket asked this question in our room: Can the eurozone support so many inflows in euro? Of course it can. There's no doubt that the eurozone can accept a lot of inflows. And by the way, if it accepts a lot of inflows, it's going to make it easier for the big infrastructure programs, the big even defense programs. They are going to need to be funded. And if investors fund it, like the dollar, like the US has been for decades, and outsiders. How shall I say, funding the US debt. I mean, it's going to be all right. There's no shadow of a doubt that the eurozone can accept a lot of inflows, and we are not really talking. And I'm even not going. I'm not thinking about it that the dollar is going to be hammered as we don't want to use it as reserve currency anymore. That's not even the subject of things. We have seen over the decades, we have seen many big moves happening without the dollar even changing as a reserve currency. On the contrary, even when the dollar was weakening, you had like management of portfolios, but the reserves in central banks, the dollar reserves did not really materially change. You didn't go from 70 to 20% reserves in dollars. It's just like literally some percentages of change. Now we know maybe the Russians, the Chinese, etc. They are also leaving the dollar boat, but there's no change in the dollar reserve status. But can there be a big move in the foreign exchange rate? Yes, because we have a Trump administration. We have um, maybe just an embryonical better scenario or better outlook in the eurozone because of all the spending on infrastructure, etc. We still need to find it in the data, but assuming and we were talking about it yesterday, maybe just maybe those eurozone data improve from the second half of this year, it will all be justified, these flows into the euro. So to bring it back to prices, you still need to, and I still want to be just trading my plan. And so here, yes, there is on the technical side a lot to say for this 117.5 zone. So lightening it up, yes. Banking the profit, yes. But changing my bias, No, I'm not changing the bias. If I see a sudden drop now from here in the euro, unless it is justified by absolute crap data, I'm still going to look to potentially reload. But we are, in my opinion, in a bit of a decent zone just around here.
Yeah, I think it still lacks that economic
Yeah,
support, if you like, the fundamental support for
yeah,
this. So on that basis, it may still be built on shaky foundations. It's going to be
totally.
an interesting second half of the year, I think.
Yeah.
What goes on, trade deals, economies, and whatnot. You know, if the US gets all these deals done and we see positivity over there, you know, you're going to see a bit of a dollar revival. But how long
Yeah,
that
but if you
lasts is remains to
but
be
if you
seen.
see European data are starting to turn up, especially I would say Germany, France, etc., the ECB may say what they want, but we may be back at 135. Who knows?
Yeah, yeah, we shall see. Interesting times ahead, most definitely. Um, Right, where shall we go from here? I'm going to have a look at dollar CAD. I pointed this one out yesterday, and I gave it a little go. My little 1, 2, 3 pattern. I know Blake was looking at this as a head and shoulders, but I like to try and look at it before any sort of head and shoulders as completed or done whatever it needs to do. So we had this similar move down here where we get the low, we have a new low, come back up, we test the old low, hold it. This is what I was looking for yesterday. Not a big trade because it's a much shorter time frame one, so I'm keeping that the trade respectful for that. But I had a little short on here and I've logged bits off down to here. It needs to get under 136.80 and hold for a move down to maybe the big old 136.50 again. Kay, I was talking about this one in the room this morning. Looks like it's stuck in the current. Really, we've got the dollar weakness, but if you look at some of the other CAD crosses, they're flying, i.e., CAD weakening. So the dollar CAD looks locked in the middle of it.
Yeah, it's a bit of a strange one. I would say though that we had this little look at 138, then that little look at 137.5. And we know from having shown this a lot that between 137 and 138 it's an important zone, right? If you look at it, there was a lot of confluence of trend lines and stuff, like maybe you don't have them, but 137, 138
Yeah,
is an important zone, and we're kind of back below, but it's not as clear cut as the rest. And I don't know, but Canadian dollar is one of those where I'm not overly comfortable in picking a clear side. Purely on the technical basis, I think you're right. For as long as it's below 138, you can defend a short position, I would say. But that's going to depend solely on the dollar because the Canadian is not really showing us a lot of how shall I say, confidence in being long as such on the Canadian dollar. Yeah, euro has been euro really has been an outperformer against virtually everything, right? It's really the um, the one that thing. But yes, you're on the Canadian crosses. They don't inspire much confidence in the Canadian dollar as such, right?
yeah, exactly. And again, you know, this is what I said it this week. You've got to look at your crosses if you want to know why something's moving or not moving. Then you need to have a look around, check the weather reports in other pairs, and get a feel for what's making a move. Because you know you might come in and see dollar yen off 150 pips or whatever, and then you think, well, dollar CAD must be dropping as well, and it's not. It's soft, but it's not coming down anything like some of the other dollar pairs. So that's why you need to look around, get a feel for other pairs and what is the driver. Mike wants to look at Aussie dollar. That's had another little tap up at the 50 area. We're here again. I'm still running some buy stops up above and hoping I don't get pinged with a little quick one that then reverses. But, you know, we've been building. So evidence, experience that I've had previously that when you get all these multiple tests over a decent period of time, if it breaks, then the greater the chances that you do get a bit of a blow through. Well, that's what I'll be looking for anyway. but I might take some quick profits if they're seen anyway, just to put some in the bank in case it fakes out if we go and break here. But it's still looking solid again, well bid. Maybe the days today. Certainly stocks are heading that way. Stock futures to all-time highs in the S&P, which has just confirmed my lunch bet with Mr. Brown. I didn't want to bring it up, but I'm going to bring it up. Though it depends on what contract you're looking at, because depending on what futures contract you're trading, some of these haven't made all-time highs yet. And I thought Mr. Brown would be looking at his own Pepperstone contract, but he's not, so I don't care. He's declared the loss, I'm declaring the win, and he's got to get on the train down here for lunch. And I'm looking around the restaurants at the moment. So risk-wise, it looks pretty good. But Kay, we got a bit of a strange risk turn now. We've got stocks heading up, but the dollar heading down.
Well, yeah, that is kind of back to the old risk pattern where stocks are going up, dollar down. That we left for many months, which was very unclear what we were trading for a while, because it was just a US thing. When the stocks went down, the dollar went down as well. But I think we are now perhaps past that zone area, and now we maybe start to trade a bit more clear cut, how shall I say, correlations again, because we've also seen, and I'm going to show it, something that didn't work for a very long time, and we're starting to get back onto the train. And about those Aussie and Kiwi, that shows us again where the real strength comes in, and where the investors manage their portfolios, and it all depends on how a portfolio is structured. And most of the time, the portfolio will be structured, let's say a conventional one. If nothing goes on, you've got your biggest block is the dollar, then the euro, then you move down the ladder relatively quickly to sterling, yen. And then only then you start to find stuff like Aussie and Kiwi. And I think that has to do with those moves that we see today. The market is clearly rebalancing from the biggest block into the second biggest block mostly, and then a bit the third one, sterling. And okay, the yen is living its own life, but it is really reflecting an investor's portfolio, what's happening now. So you can see that Aussie and Kiwi, yes, they have been flying as well from the lows, because they were sold as well relatively hard when it was when we were rather trading risk off. But now, contrary to sterling and the euro, they haven't done fresh highs yet, and I think that just reflects the percentage of investment that asset managers and let's call them investors have in their portfolios. But that also and you may be completely right in having your buy stops through it. That also would mean that they could also all of a sudden catch up, and you see a big move without euro and sterling moving too much. You can see a big move unfolding. I'm really watching it closely. Also, that Kiwi is trying to, but we haven't yet broken the prior high, which is around 60.85. But if it goes, I think we're going to trade 61, maybe 61.70 also in a flash.
Yeah, it could be a quick mover. This is a big old zone we've got here.
Yeah, because the liquidity in the Kiwi is not big, and I know from experience. One of my bigger clients, when I was in banks, that was always my fear, because I was covering the Aussie and the Kiwi and the CAD actually in those days as well. And I said, like, don't ask me anything in the Kiwi. And then he came with a request for a pretty big Kiwi deal, and I spent virtually the whole day trying to cover it. So
yeah,
really, I mean,
customers who need them.
The liquidity sometimes is very, very poor in the Kiwi.
Yeah. So yeah, I mean, obviously amidst all this, it all looks good, but we've still got this end of month stuff going on. There's always something that just throws a bit of caution in. I mean, if this was happening you know, without the end of month, end of quarter, and everything going on, you think, okay, this is all fine and good, but you just think, oh, you know, is this real? Is it end of month? You know, I don't know what to make of it. If we're still doing this come next Wednesday, then you know it's real. But you can never just say, oh, okay, we're on a one-way path and we're going to keep continuing. Gav, you're right. Yeah, you know, sentiment changes really quickly, as you said earlier about the euro. You know, 1 minute everyone's screaming about parity and everything. 6 months later, we're talking 120. You know, some forecasts will be right one way or another. Right, Kate, I'm going to ping it over to you, mate.
So there's one where it's not completely clear cut, and it's not your driver, but he used to be a real driver. And when things, let's say, quiet down a bit, we're hopefully post the worst in the Middle East, at least for a while. We never know over there, of course. But since April, these differentials between the euro and the dollar have been really okay. There was some kind of correlation, but I was saying in those days, we've been saying for quite a while. I mean, correlations really got thrown out of the window. But what we have seen over the past couple of sessions, and that helps this euro as well to do pretty well against not only the dollar but against a few other currencies as well, is that the differentials are starting to tighten. So assuming, and if we look at the global risk picture, we are slightly somewhat getting back to these correlations. Perhaps we need to start watching this again, this euro and the dollar divergence in the interest rates. Okay, so this has been also pretty supportive again over the past sessions for what's happened in the euro dollar. And as a matter of fact, over the past week, where the euro has been quite big, we've seen a pretty decent tightening of about 20 bps between the short end euro and the short end dollar. So I'm going to start monitoring this again to be one of my little guides when I'm looking at currencies, especially the euro dollar. This could start to come back into play. Okay. Now looking at what am I looking at? Well, the euro dollar, yeah. I mean, this is one that I was looking at. I know Ryan already briefly looked at it. It is the 78.6 of the whatever happened during the pandemic. This is the COVID high down to the pandemic low, and this is when when the Fed started to hike rates, etc. We are at the 78.6 at 117.5. So I think this is a pretty important level technically. I also know that people in our room, Ben is looking at, people are looking at harmonics, also think that 117.5 is a pretty big level. So I'd say respect it. We don't know what's going to happen month end. Well, I mean, yeah, we have some idea about what's going to happen month end, so we may actually overshoot come Monday or so. But it is a pretty big level, and especially bearing this in mind, I would say for the new month as well, unless we are already trading 120, of course. But it could be a pretty big level now, and I think there may be, and what we have seen over the course of our morning was a run up very close to the level, and a bit of profit taking starting to come into the market. So keep that 117.5 in mind. Yeah, and then on the cable, we're around same important levels. I always spoke about this 137.40 up to 137.70, and actually you can add here 138 as well as being a pretty important zone. Again, I know this low is debatable, okay? Depending on what broker you have, it may show a little bit of a different low. But anyway, this being a very big move, whether it's 103.70, 103.30, 103.40, 390 or so. The 78 is, what am I looking at here? No, the 88.6 is still going to be there, and the 50% of that really big move down from 171 post global financial crisis, post European crisis as well. That big move lower that we had over the course of 10 years, the 50% will never be too far away from where we are now. Okay, it's going to be like 10 pips or so max. So I think this whole zone here is pretty important. If we go back onto a little bit shorter, the daily, you can also see it's the 137.40 here, and that was the start where we from where we had this huge drop down in the sterling, and that's also coming in around here. So this whole zone from here up to 138, 138.05 ish is going to be important. So was talking about that they could hit at the same time. Yesterday it looked as if the cable was going to go much earlier than the euro, but the euro caught up. So now we are here in both of them. I think both of those areas are relatively or pretty important. Okay, if you fly through all in the euro dollar, all the 120 callers will be getting louder and louder. And in the cable, yes, we have some stuff around 139, 139.80 or so, but it's going to be the psychological 140 that people are going to look at. And if you look at it pure technically, there's not a lot. If you break above 138 to hold it back from even having a look at 142s. But I think this zone is important enough, so I decided to really let some pretty big pieces go of my more longer term shorts in the dollar in both pairs here. Okay, Swissy. Uh, it's a mess. If you look at the if you look at the Euro Swiss, it was like the Swiss was really got bought like there was no tomorrow the day before yesterday, and now Euro Swiss is gradually getting up again. We went up to 94. Well, we are shying away a little bit. I think this is one I'm really going to look at. I've got like really tiny running, but it's really going to depend what's going to happen now into month end. But if we see a drop here, I'm going to be very tempted to catch a knife into month end. And the dollar Swiss, you know, as I said, I mean, as soon as we broken through this 180, this 81 and a half, it started to look fragile again. And then we broke again below this 80.90 yesterday. We had a brief look very close up to this 80.90 again in dollar Swiss, but we shied away. 80 being a big level, I don't see it really, but it's undeniable. We are in this territory where we can never say never for S&P, for instance, but on the tip of my toes. We never know when they are going or if they are really going to come in, and they won't come into the market and go like, yeah, I'm gonna pay all the offers in dollar Swiss. They will just sit on bids to smoothen the move if they find necessary. Okay, but if you look at this is still looking very bearish. I mean, it's a 4-hour chart, so a little bit longer than what most of you may be looking at. But if you look at those moves back up, it's extremely shallow, right? I'm not going to call any reversals. Not even, well, short term maybe above 80, 35, 40, but really, to me, we have to get above 80, 90 again before starting to think about this potentially being being ripe for a real reversal here. The Swiss is a strange animal because it's not really following risk in any shape or form lately. Sometimes it's back on the risk train, then it leaves it again. I think we need to wait really, unless you have a position which is quite nicely in the money. But for those having no positions here, I'd really would say wait for the end of the month to show up the flows that needs to be done. For the rest, I'm not going to touch it anyway. I'm really not going to, unless something dramatically happens, especially for the dollar, that we need to revise our opinion on the dollar. But I doubt that we see much of that before the end of the month. I'm just going to show one more because, as Ryan was already showing as well, and we were showing on prior flows, those yen crosses are still, despite what's happening on the dollar yen, we had a bit of a shakeout there. I think that the yen pairs are still beat. If you look at euro yen, if you look at well, across the board, and this is what I'm going to be looking at. If in case the market needs to buy yen for month end, anywhere around this 196, anywhere between 196 and a half, 197. I know it's a while away, but in yen pairs you can do those moves quite rapidly. I'm going to have a close look at this because if we get back down to here and then start to go up again, there may be a case for the yen to weaken a bit more, and it's still kind of what I'm thinking about in all those most of those yen pairs, apart from the dollar, of course, because I'm not a dollar bull by no means right now. Anything else that people were trying to look at, or Ryan, do you want to look at anything else that on the
Did you
chat?
cover dollar mix?
Sorry?
Did you look at dollar mix?
No, not yet. I am. My chart is very different of yours, of course, but yeah, I think here we're back on the level. We are back down to these 1880s. Could be enough once more. But if we get confirmation through 1880 and 1878-ish, 77-ish, that move finally to 1850 is on the cards for me. As I said yesterday, this looks like a short-term blip, and we are back below that little zone here. Ryan is looking at the 19 figure, which is obviously always a bit of a psychological level, the big figures. But it's no, we could actually maybe do this on the real short term, and then look at yeah, it's still not showing up 19 on my, but it does look, this 1902 perhaps is where we may see a bit of an intermediate one as well. I did scale back a little bit on my short, and just hoping for a little return up to here, and then add again, because globally the picture has not changed. Euro sterling, David, it's I can't really see much in this. I am in a small position short for as long as we are perhaps below here also. But it's just I've got a hunch on month end, but I'm not even sure that it's going to materialize. But we are really stabilizing around here. Whatever we see from between here and month end, I would really put it down to flows, and then we pick up again after the month end. But we do find support. Okay, we do find support every time we go down into the 85 teens. It's finding support for now, but equally we can't rally over 85.40. So we are in a very tight range. We need that range to give up, and then start to break below or above different levels there. Ryan, back over to you, mate.
Thank you very much, mate. Wonderful stuff as always. And we'd like to thank you guys and girls for coming to the Flow Show, supporting us here, giving us your eyeballs. Don't be slow. Last few days to get on our mailing list.
We're losing you, Ryan.
Into that prize for TFP. Evans, yeah, cheers, mate. Evans, you got me? Am I here?
Yep, you're back.
Yeah, I don't know what, I've got some wobbles myself, I think, today. Evans, just ask us about WTR tomorrow, and we'll have a look at it tomorrow or later on Face. Have a great day, everyone. Trade safe. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.